Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Thursday, June 20th, 2013. Well, a continuation of the trend to the downside today, a candle that's made a lower high and a lower low. Another black body candle denoting the sellers making net bearish progress on the day between the open and the close. That's a bearish factor here. But if we look at the size of the black body, it has decreased substantially. It's roughly about half the size of the black body from the previous day's trading. And it does suggest that the sellers may not be able to maintain the momentum that they had for that day, the previous trading day. It does suggest that the market may have done quite a bit of work over the last week or so with this first time frame downtrend, and there is a possibility of the sellers having a bit of a break. Now, in terms of the short-term dynamics, that's the only factor that does suggest that. We have seen the sellers close down between the midpoint level and the low, suggesting that they have strong control, and they have shown some solid commitment to taking this market lower, and the sellers have been able to close the market down below the important 92.21 level of support. There was potential for strong support around that area, and we have closed only just below there, but we have done that in a fairly bearish way. It does suggest that there is a possibility of this market trading down to the round number 90 cent level. There isn't any substantial support between the 92.21 level and the 90 cent level, so this market could move very, very quickly if it builds solid momentum for tomorrow's trading. Now, we can see this current candle as it's developing. The 92.21 level is acting as an area of resistance, and that's a very strong likelihood, and we do need to watch that level as potential resistance tomorrow, as we do need to watch this swing low around the 93.21 level. That has potential to offer itself as resistance now that the market has traded through that previous support area. Now, in terms of the Fibonacci extension, we have seen the market close exactly at the 100% level, testing down below there and closing just at that level, suggesting that the level may hold. It is an important level. Let's watch for a potential higher high and higher low. The reduction in the size of the body compared to the previous day does worry somewhat, but the size of today's body is still relatively larger to quite a few of those in the recent month or so, and that does suggest that the sellers may still have some solid downside momentum. The sellers closing with control does suggest that there is a possibility of trading to lower levels, and the next level that the market may interact with to the downside is the 161.8% level at 89.10. So the market will need to trade through the important 90 cent level before it trades down to that 89 level. Now, in terms of the Fibonacci retracement, we are in an expansive mode of that. The previous day's trading, we saw the market break out down below the 100% level in a very, very bearish manner. It did suggest the market had enough momentum to test to lower levels, and that's what we've seen, continuation of that trend. And it gives us a target at the 161.8% level at 91.15, so we do have an area that we can watch between the important support that we've seen in the recent today, the market breaking out just below there, and between the 90 cent level, so 91.15 could be crucial to this market. If we do see buying coming in around that area, it could suggest good potential for the market to trade to lower levels. The next level down here is at 261.8%, but too far away at the moment for us to examine. Now, in terms of Ichimoku, obviously a bearish market in all three time frames, and very, very strongly bearish. We can see a second time frame in play here. Market making a long and very strong series of lower peaks and lower troughs, and no sign of that ending. Very, very solid downside momentum to this market, trading below the cloud, trading below the Kijun-sen and Tenkan-sen. So we're bearish in the long-term time frame, the medium-term time frame, and the short-term time frame. Both of those indicators are pointing down very sharply, reflecting the solid downside momentum. The only thing that concerns is that it is, especially this Kijun-sen, is pointing down very sharply, and markets find it difficult to maintain momentum as strong as that for a long period of time, and it wouldn't surprise to see some buying come back into this market. We can see the market here as this candle is developing, flirting with this 92.21 level. It will be crucial. It wouldn't surprise to see some buying coming in and the market to trade back up above there, but as I've mentioned, the area around this swing low should hold as very, very strong resistance being prior support. If the market, however, does trade through there and trade up to around this 93.86 level, that has potential to hold as resistance. We also will have the Tenkan-sen trading around there, strengthening that level as potential resistance to this market. So with the trend being very solidly down, this market is not going to appreciate substantially if the buyers do come back in. But looking at the distance that the market's trading away from the cloud, it is trading a long way away from the cloud and is looking very overextended. We are trading fairly close to the Kijun-sen and Tenkan-sen, so in the medium and fast-term time frame we're not looking terribly overextended, but in that long-term time frame the market is. But as we move on through the next couple of weeks, the cloud will be moving down, and equilibrium will basically be moving down to meet this market if we do go sideways or whatever. So there is potential for the market to find equilibrium over the next month or so, but it will be at substantially lower levels than where the long-term equilibrium is at the moment. So very, very bearish market. The Chikou span here is below the corresponding price action, confirming the negativity that we're seeing in this market. A good possibility of this market testing lower. We have that one Fibonacci level around the 91 area we need to watch, but no solid support until the market trades down to 90 cents.